Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over 100,000 AUD. That's made up of the 43,210 AUD in my Vanguard portfolio and the 57,599 AUD in my stake portfolio. Currently, my stake portfolio is up 32.7%, which is around $14,195. And my Vanguard portfolio is up as well, around $7,000. Between the two of them, I have some key holdings, such as Apple, Amazon, Costco, Google, Microsoft, and VOO, which is a market tracking ETF. Today I'm going to be just doing a quick update on how things have been going recently, my recent investments and my plans going forward, and the reason why my investments haven't grown as much and I haven't been doing as many deposits. First, I just wanted to talk about how the market's been trading. In the last week, it's really bounced back and is up 3.66%. If you take a look at the broader month, you can see the stock market really had a dip here. This was probably a good opportunity to buy in. I bought a little bit in, but I didn't have enough money sitting on the side for me to really make the most of it. And it's really had a nice bounce back this week, up 3.66%. My portfolio is up 32.7%, and it did dip into the 29% during that time. But yeah, it's been a nice little bounce back, and as you can see in the last day, it's up $696 or 1.22%, just my stake portfolio. Having a look at my Vanguard portfolio, you can see this is sitting at $43,000, and it's getting closer and closer to that $50,000 mark I hope to hit in March this year. You can also see I'm waiting on some distributions or dividends, so I'm expecting $400 in dividends, which is my largest ever dividend, which will be good. I plan to reinvest that money plus the $125 I have sitting in my cash account and invest in either VGS or VLC. I'll see which one to put the money into. VLC just tracks the Australian large companies ETF, so just the 20 largest companies in Australia, such as the big banks, some mining companies, things like that. It had a good year last year, but I don't know too much about the outlook for this upcoming year. More on that I'll speak on in the future. But after such a good year for the banks, it's hard to see how they'll have following up that year with the likes of Westpac up like 40%, Commonwealth the same, NAB up 30%. So it'll be hard to replicate what was done last year. VGS tracks the international shares ETF, so it's around 1,500 stocks, mainly in the US, but across some other continents as well. And it holds a lot of the stocks that I hold in my my stake portfolio as well. So it's kind of overlapping, but it's the closest I could get to investing in VOO in my Vanguard portfolio. So my goal is currently just to keep steadily investing. I know I mentioned I wanted to invest around 1,300 a fortnight. It started off a little bit slower to start the year because I've had a lot of payments, like annual payments, like car registration, just lots of things I've had to pay. So December's always a bit of a harder time because you have Christmas and other events like that. And then January's also those start of the year stuff. So I understood I'd start a bit slower. But once I can get all these behind me as the weeks pass on, in February, March, I should be able to keep hitting the ground and keep investing. Speaking on that, I did put $500 into my Vanguard portfolio, and I bought a few more shares of VGS, so that's why this is up to 190 now. I nearly have as many shares in VGS as I do in VLC. At one point these were close to 50-50, but I'll go through the Excel spreadsheet in a bit to kind of show the breakdown. In terms of my stake portfolio, it's quite hard transferring money from AUD to USD right now, just because of the exchange rate that's been hit so heavy in the last kind of year. So I haven't been investing as much in my stake portfolio. That's why you could probably see my Vanguard portfolio has really been growing and growing in value, because I've been kind of mainly investing into that. But yeah, it was a good time recently to be buying into companies. For example, Amazon, I was really gutted. It took a bit of a dip. As you can see, it's up 3.95% in the week. When I saw it was down here under 220, that's when I was kind of like kicking myself that I couldn't be buying in more. And it's had a nice little bounce back then. So anyone who's bought recently who made the most of that has probably got some extra gains in their pocket. Some other positions also, the likes of Costco. So this was a staple of mine. I actually sold out a fair bit of it. I sold a share of Costco, and it's had a bit of a rough month, down 2.4%. You look in the last 6 months, it's still up 12.5%, so you can't be complaining as an investor. but it was a stock that I've been looking at if it did continue to dip. And then there's some of my classics like Microsoft, which I plan to hold long term. It's a bit expensive at the moment, and it's still down 1.85% in the last 6 months. So not been a very good time for Microsoft investors. Overall, I'm still happy to be up and the market's bounced back now. And just these little changes, especially as my stock portfolios get bigger. For example, now that I'm over $100,000, if the market goes up 1%, that's $1,000, which sounds pretty crazy, especially when you go to work and you earn, I don't know, $300 to $400 a day. And I think your stock portfolio can go up that in the matter of a day. It can also go down that as well. So as these numbers keep getting bigger, hopefully the compounding will help, and we'll just continue to keep growing. But yeah, it's really starting to kick in now, especially when you look back at some of my old videos where the portfolio was 20,000, 40,000, 60,000. Now that it's up to 100, that was a really big mark for me to tick off. Having a look at the Excel spreadsheet as well, this kind of just breaks it down a little bit better into how I'm kind of allocated at the moment, just to kind of show you both portfolios. In my American portfolio, you can see it's kind of 50% is VOO, which is the market tracking ETF. And the other 50% is just kind of my individual stock picks. So stocks I believe in, stocks that I just have a bit of fun with trying to beat the market. It's nothing really serious, especially as these portfolios grow. My individual stock holdings continuously are getting smaller and smaller. So it's not too big of a deal, but I do like still investing in individual stocks and making videos on it, and just having a bit of fun. Especially whilst I'm young, I can kind of try to hopefully pick some winners and just kind of track on these videos how they continue to go. In terms of how the portfolios have grown, if you're pretty new to this channel, I like showing this because it kind of shows the long-term effect. Again, I've been investing for a few years now, so it's not really new to me, but I was a first-time investor. I didn't have any family who invested or anything like that, so I had to teach myself, and you can kind of see how it's grown over time. So I like looking at this graph because sometimes I'll be putting in deposits, or you'll see your stock portfolio went up, I don't know, 6% in 6 months. You don't really see what's really going on, but when you put on a graph like this, you can really see the growth over time. And a lot of this is deposits, but a lot of this is also just compounding interest, which is really good. And as the years go on, the compounding interest should hopefully overtake my deposits, but that is the goal long term. So at the end of this month, I'll keep updating this, and then we'll be able to see how it tracks into the future. Like I mentioned, I'll be getting dividends as well, my largest ever dividend, so $400, which I plan to reinvest. But you can see that's my biggest dividend by far. 281 was previously my biggest, so it's nearly $120 bigger this time. And that just shows again the compounding interest and just the effect of continuously reinvesting your dividends, and buying more shares means hopefully bigger dividends in the future. And whilst I'm not a dividend investor, just reinvesting these dividends does help the growth over time. If any of you have seen any of those compound calculators where they talk about if you reinvested your dividends and you see how much extra it grows. So that's why I personally don't like to take out my dividends. I just want to keep reinvesting them, especially right now when I don't need the extra cash flow. Maybe when I'm older and it's like a second source of income. But at the moment, the goal is just to keep reinvesting it and to hit over 2,000 in dividends this year. Overall, that's just a quick update. Again, I haven't been able to grow the portfolio as much as I hoped just because of all these expenses that are kind of popping up in my day-to-day life. But after we get through January, things should slow down, and then I can really start to get into the groove like I did last year of just every single month consistently putting in money, set amounts, and just growing it as fast as I can. So hopefully hit 150,000 before the end of the year. It's quite ambitious. But it's a big goal of mine. Hopefully the stock market helps in terms of growing, but in terms of work and stuff, I've got a better job now, more money, larger dividends, things like that. So I should be able to put extra funds into the portfolio, but feel free to share how your portfolios are doing, and any thoughts on mine going forward. Cheers.